Good morning. My name is Scott Rudler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing some mixed markets around the world this morning as the controlled pullback that we saw start earlier in the week somewhat continues. So before we get to our markets, Scott, how did China and Japan look to you?
I just think nice digestion. You had a big move. It's digesting near highs. It looks like they can continue. You look at the chart here of the FXI, you will see here's that bottom over the summer. Here's where it broke the downtrend. There's your retest, and pow. So here we are digesting above this gap, letting some of the moving averages catch up. So I would say pretty damn healthy, or darn healthy, here in the FXI. Give it a little bit more time, and I do think that we will see a move upwards to 42. As far as the EWJs, you know, look at here in stride. This has been something we've been talking about all year. Lots of different spots to get involved. After this outside day, there was your correction. And from here, you have a low, a higher low, another higher low. Made a new high. Here is a little bit of a pullback going to the 8-day. So if you want some exposure, here's your spot, because I do think at some point, whether it's the end of this year or next year, you're going to see a move through this high here of 1243.
And in terms of our markets, we've seen our markets pull in from about 1800 to the 1780s, and some are saying this could be the start of something bigger, while others are saying this is just the same type of action that we've seen all year. And of course, we'll be awaiting the minutes from the Federal Reserve later today. So Scott, do you think that could potentially shake things up for us?
First of all, I wonder who thinks it's going to be more. Mr. Faber, Mr. Schiff, Mr. Anyway, I'm not going to get into those names. These same guys have been saying the same thing all year long. So until the market really proves that it's going to be something bigger, stay with the trend. And there's been a few different types of trends. You've had the accelerated trend, you've had the intermediate, and the macro. So it all depends on how you want to play it. If you look at the chart here, as far as the macro trend, this has been in place just from this year, that November 16th red dog reversal. It right here, you had a little bit of a 4.5% pullback, another 4%, another 4.5%, but it's always taking it in stride. So if you want to be extra cute up here, you're looking closely. I'm looking closely up here just because I navigate for cash flow. And right here, you had this small outside day when we came back below 1798. What did it lead to? Another small down day, but look where we are, right at the 8-day, which is something we've been basically holding since the restart of this move since October. So with that said, we did hit the 21-day there. So I would say for the bears to have any kind of control or try and have control, they need to close this thing below 1775. If not, this little area is going to be a buy zone for new highs, coming through, maybe Thanksgiving or Christmas, but we shall see. At this point, you saved yourself about 15 handles with all the bears growling.
And we do have some big retail earnings out this morning. Retail has been pretty hit or miss as of late. Lowe's at last check was down about 3% after missing earnings by a penny and raising its outlook. So clearly everybody thought this would be a better report following Home Depot.
Right. Well, Home Depot had a good report, and just to show you how exits and entries matter, you look at Home Depot. Everyone was talking about it yesterday, but what did it do? It gapped up and closed on the lows. You know why? Look where it came from. So those earnings were priced in. So with that being said, you look at Lowe's, which is perceived a little softer. This is actually just pulled in off highs. So, into this downtrend or into, this uptrend, this could be an opportunity. So I would say with that being said, right into this area, if you get that, I think it's buyable. So this would be support 1. And then here is your support 2. But ultimately, I think it should take it in stride, except for you have to know what's priced and what's not. And Home Depot, they sold the good news. Maybe they try and buy the bad news here in Lowe's or the softer news.
Now, at the same time, JCPenney is getting a pass despite reporting a quarterly loss that came in wider than expected. At last check, the stock was up 6%. That's quite a pass. Yeah,
well, 6% for a $9 stock is like 50 cents. But this stock was left for dead, for bankruptcy. And then, in the filings, which I thought was interesting, about 2-3 weeks ago, I started buying JCPenney's for a technical play. I don't hold into earnings, so I didn't have it today. Even though when I saw it down 40 cents, I'm like, they might take this positive, considering that a lot of funds and new money has gone into it down here, to support it. So with that being said, you look at the chart, JCPenney's, this is when I started to get interested, when it broke this minor downtrend right around 720. Here is when you had another trade, and then this was your most recent one. So I'd say at this particular point, it's up a little bit this morning, or 5% actually. That's a little bit more than a little bit. Here's your 930. If it were to get above 930 and stay above 930, I think that's going to be very healthy. And then really, at some point going into perhaps next year, you could see a continued move up to the $12 area, and it might seem like a lot, but look where JCPenney's came from. It was at what, 45? 2 years ago. So down here to here, a nice little treasures for trash trade.
Right. Well, speaking of healthy action, we saw that banks hold in strong, which we'd like to see. Let's start with the XLF, which didn't get much upside momentum, but is holding in well.
Yes, and this one was the first thing that I bought, or one of the first things after the jobs report. What was that, a week and change ago? Rightly so. You look at the banks, they were very lethargic for a while, and then here was that descending channel, broke above with authority. You could have even bought it back on the retest, and now it's hovering above highs. I think the XLF you can continue to hold if you want banking exposure, but I think you can create alpha by going with individual names.
Okay, how about some of those names? How about JP Morgan has been acting better now that they've had their settlement? Could we see it potentially make new highs on the year?
I think it does, but it also had a big move. Like, people thought it would be up so big today because they finally had the settlement, but look where it came from. So it goes to show you where you have to watch when it ignites, prior to the news. So this was, the move that engulfed this descending trend line. Here is where it digested, and now it's stalled in front of highs. So I would say let it go sideways, let the 8-day catch up, and then at some point, I do feel it will take out these highs. It just might not happen today.
And one of your favorites, Bank of America, showed some real relative strength, tacked on almost another 2% yesterday. Looking good.
Yep, 2%. 2% a day keeps the doctor away, someone like that.
The bears away?
The bears away, even better. This stock, I've been talking about it since 2 summers ago when it was at $8, coming up with plan after strategy. Last year we talked about putting it in the drawer. So if you put it in the drawer, congratulations, you're riding the wave. If you do approach the market tactically and you watch the VTF, you will have seen that right around 1430, which is when I rebought Bank of America. You look at the chart here, I'll show you why. First of all, this was that last high, and it's been in consolidation phase for 4 months. Then boom, look at that move, okay? And technically it woke up. It made sense, right? Look at this descending trend line here. You had a descending trend line, very, very tight. Here's what you call a day one, ignited above it. And then it went sideways, and I think in one of these days is when I put it back on, and then pow, now it's at 1520. It's a little extended, but ultimately, I think if you go to this weekly chart for next year, or let's go to even the monthly chart so you can see it a little bit better. It's just coming out of this little flag area. I don't see any reason why at some point next year this stock can try and kiss 20, if not 24.
All right, and Citigroup also holding in well. Looks like it's trying to build a new base. At what level do you think we might get a breakout here?
This is trying to play catch up. We talked about this last week, right around 50-50, and it still acts well. It's one of the few bank stocks very far away, not even very far, but it's not at new highs. So if you want to catch a play type scenario, look at Citigroup, look at the chart here. To me, I don't own any right now. I still own Bank of America, but this is where I started buying it right in here, and it still looks good. Okay, I think I'm going to probably get back in some, and then if it were to start clearing this 5140 area at some point, if the rally continues, why wouldn't this one that's been consolidating for a decent amount of time make a stab at that 53 plus? You look at the monthly chart here on Citigroup, it's absolutely nowhere. Look where it came from because of that reverse split and whatnot. So it might seem like it had a big move this year. Let's go to the weekly, but ultimately it really, really hasn't. Okay, wow, look at the size of that base. So this could be something to to keep in the drawer also if it continues to do what it's been doing. So here's that level.
What about SunTrust Banks? This one's approaching a major resistance level at 3630. Do you think it'll have the power to break through it?
The power. Let's see. Go to SunTrust. I don't really look at this one that much, so we'll look at it today. Go to the daily chart. A little sloppy, but it looks okay. It hit this resistance area and backed off to the 8-day. I would say as long as it stays above this area, your next momentum trade would be through this 36 plus.
All right, well, coming up, we're going to go in the trenches with some energy stocks showing relative strength. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day and I look forward to seeing you in the VTF.
We're back and going in the trenches with some energy stocks showing relative strength. Let's start with Chevron, which had a nice breakout at 122 after hovering above the 200-day for a few sessions. What do you think about the composure of this one at this point?
I wish I would have soared yesterday. This stock looks good. You know, you look at some of the other names that had big moves we'll get into. This is tight, just starting to go, just poked its head above this little area, reclaimed all the moving averages. If we are down a little bit today and it's down, I would say maybe go for a negative to positive move, and if it trades above 122.38, let it continue back to highs.
How about Exxon? Nice action last week, and then it had great follow-through on Monday. Little digestion yesterday. What do you think today?
I can't believe how poorly I traded this one. I was buying it in the hole when it wasn't ready and lost money every single day. With that being said, when it went, I'm like, I'm not going to touch it. And now look at this stock. I guess Warren Buffett has a better touch than I do. And this is, I think, where I was trying, after this big move lower. You look at how it was out of play into support. I was trying to buy it here, and all of a sudden now look where it is. So with that being said, I would say as far as a tactical scrappity-doodah play, okay, let it hover above this area, let the 8-day catch up. Then at some point, perhaps it goes again. But I wouldn't be chasing it here. I'd give this one a little bit more time. I think you do have a better setup right now, even though it's more of a laggard because it doesn't have Warren Buffett in the mix, right here in Chevron.
How about Apache, though? It's been inching higher ever since that 2-day breakout that we had last week. Do you think this one will go again? It has been holding above the 8-day.
Yeah, this one has a nice setup. If you look at the chart, I haven't been trading this one. I haven't really been that active in this group because you can't be everywhere. But here was your last breakout, holding higher right into the zone. So right above 93.20, it can continue. It's been a very strong stock.
All right, let's do some quick hits and talk Apple, which still hanging by a thread. What do you think?
It's hanging by a worm. Because every time it looks good and you buy it, you ruin your price and you get pissed off. Oh, well, you get upset. With that being said, we are traders around here, and that happens. So look at the chart of Apple. Okay, it tried to go that Thursday, and then remember Friday, I was like, option expiration. Let's give it a little bit more room, and then it broke back below. So you take a closer look here. It's still fine. It's still overall from where it came from, and this last breakout also, it's still in digestion mode. Just hasn't been ready. So the unfortunate thing is we play Apple for momentum, not for it to be back and forth, back and forth. So with that said, I guess you could draw another little line like this now and change this pattern up. So with that said, if you want to do that, which is what I'm doing, I'm still out of the way, going to let it kind of regroup here, and then at some point, if it starts to get back above this area, I'll go with it. But a lot of people are actually even trying to fade this, because if it breaks below 517, you then have 512, and if it breaks 512, you got 500 right around there. So at this point, I think it's not sure exactly what it wants to do.
What about Netflix? Just had a 2-day pullback into the 21-day. Do you think it'll pick up some buyers here?
It's coming on a trend line, so I think it's something to watch both ways. A lot of these high beta names have been flashing some mixed signals. This was to sell the earnings right there, and then it did have a decent move back up. And now if you look at this recent little trend line here, I'd say watch this close. It's at a crucial area. So I might even look at this today for a potential long setup. If it were to do like an 80-20 at 334, then okay. If it trades below it though, don't try and just catch it. Wait for it to come back above, because this little trend line, if it were to break, you could see 322, especially if the market plans on selling off a little bit more.
All right, good to know that. Well, Scott mentioned yesterday in yesterday's morning call that he was looking for a small bounce in Tesla, which we got. Finished in the green with a 3.7% gain. Closed pretty well, too. So will this be on your radar for continuation today?
Yeah, this one closed okay. It didn't have such power, but if you bought it right when it went from negative to positive, which is what the plan was, there was tactical cash flow there. There was scrappy cash flow, which is what we're looking for. Scrappy trades to tack on money to your existing year and preserve capital. With that said, you look at Tesla, it was downgraded today, so it's off a little bit. Here's your one green bar after, a big time move to the downside. So I'm going to look to see if some buyers come back. Maybe it goes from negative to positive, and if it shows relative strength, maybe even get another trade above 129. But I would, put a 5-minute and 15-minute chart up on this and make sure you follow those in order to get that created. So with that being said, we have 119 as your new point of reference here. If it doesn't go from negative to positive and that downgrade controls it and breaks this, you're going to see a move further down. And if you put on your 200-day moving average, which I don't know why it's not on right now, you will see that, oops, sorry, hold on, 200. 200. You'll see where that is. And where is that? Anyway, it's down about 107. That's one of them. There are two moving averages. So here's your next spot, okay, if it were to break this area, in my humble opinion.
All right, let's talk Facebook. Still hanging by a thread around 45.73. What do you think, which way do you think it might go?
This pattern is starting to stare at me. You know, this head and shoulders top pattern. First time it went below it, and then there was no follow through. It had a reflex move back up, and now it's looking a lot more bearish than bullish, but this pattern has to break in order for that to take place. You know, if you look at Facebook, you know, I've had a lot of different theses, different things on it, you know, during the course of the year. I started the year, it was in my 2013 thesis that I think you can get back to the IPO or something like that. Did that segmenting with Kramer as this cup and handle built, so that was the big pattern here. Here was your earnings, and then your pent-up move to the upside, and now every time, you know, you get a huge move like this, you get some kind of corrective pattern, and right now this looks as if this head and shoulders pattern is somewhat complete. I entered today a little bit short, okay, and I am thinking that if I see relative weakness, and if it were to break this, I think you get a trade down to perhaps, I don't know, maybe down to this moving average, which comes in right here. And still, if you think about where Facebook came from in the 20 area, still almost a double, you know, at 41.89. So this wouldn't be such a bad, unhealthy thing if it were to come a little bit further in.
All right. And Amazon, we know it made that new high at 373 about on Monday, then had 2 days of rest since. So what do you think heading into Amazon?
I think this one is holding up better than some of the other high beta names, maybe because you know, Christmas time is right around the corner and it's the retail season. So you look here, it had a very explosive move here, 2 days to new highs, and it's been trying to hang around here. I guess you could trade it versus this low here. The low here is you know, 362, and then if the market were to turn higher, I would think this is one of the first few high beta names that can make new highs once again. So for that to take place, maybe you start cheating if it starts breaking above 370, because then 373.50 could happen real fast.
All right, so in closing, Scott, what will you be focusing on as you begin the trading session today?
Well, I want to do one more name, this Panera, since I love bread, and since someone asked me on Twitter to go over it. So here we go, Panera. This has been in just it was in a downtrend, okay, where it started to break above right around here. You had a nice igniting bar right there. Seems like it's holding higher, regrouping, reclaiming a lot of the moving averages. So I think it looks okay. At this point, I wouldn't say it's an A play, but it could work its way back up to 180 if it wants to. I would say it has to stay above this little area in order to stay on the radar and stay as like maybe a B plus trade versus a B minus trade.
All right, so besides Panera, what else is on your radar as you begin the trading session?
Well, I want to see what happens today. You know, we've had, 15 handles from the highs to where we are now, downside, very controlled. Does it get more extreme? Does volatility pick up? What happens with the Fed minutes? You know, I'd love to see a retest of 1775. If we were to start breaking below 1780 on the S&P, I'll probably cover my spiders and then look to see if I could buy that, you know, prior high area to hold, because I'm in the camp that I think we hold, not break down. And then with that being said, you know, I want to see what's acting well. Is high beta acting a little bit better in building? Are the financials still strong? Do you still have one-off, you know, breakout type areas? And I'm going to try and not be the way I was last week with 8 to 12 positions long. You know, maybe go to 4 or 5. But for right now, still a little net short. I'm very tactical and selective, and I'm just going to see if I could be very scrappy and continue to put a month together and then wait to see what happens for Christmas.
All right, stay scrappy, friends. All right, that's your morning call for this Wednesday. Happy trading. Have a great day.